Tesla stock had a great trading session on Friday, but there's a couple of things we need to talk about. So last week, Tesla won permit approvals for diner and drive-in movie superchargers in LA, as well as the release of Elon Musk doing a live stream for the new FSD. So there's a lot of great news, but there's a couple of things that we absolutely want to pay attention to. For example, last week we had Fed Chairman Jerome Powell give an opening speech at the Jackson Hole Symposium. And one of the things he said is that although they do expect the labor market rebalancing to continue, evidence that the tightness in the labor market is no longer easing could also call for a monetary policy response. So that means that the Federal Reserve is still keeping a pulse and trying to get an update of what's happening in the overall labor market. And guess what we are coming and getting this week? That's right, this week we are getting the job opening numbers, sometimes also referred to as the JOLTS report. And although it's evident that job openings per unemployed persons has been declining, we still want to see that further decline and see more tightness in job openings, because we want that to satisfy the data for the Federal Reserve so that they don't go ahead and hike in September. So that means if we get job opening numbers that actually tick upwards, well, that could cause some fear and panic to the overall market. Now, typically, you want to see a robust labor market. However, it's enormously evident that the Federal Reserve, in a sense, wants to keep their boot on the neck of the labor market. This way they could start to see it loosen up a bit and go ahead and help them on their fight with these, inflationary pressures and bring it down to that 2% goal that they keep on repeating. But along with that, on Wednesday, we get the ADP employment numbers. So we're going to get some more job data coming in, as well as the initial jobless claims coming in on August 31st. And then on top of that, at the same time at 8:30 a.m., we're getting the PCE index numbers. Now, the PCE report is a personal consumer expenditure report, and this is an inflationary gauge that the Federal Reserve actually prefers to look at. See, oftentimes we talk about CPI, but the Federal Reserve actually prefers to look at PCE. But along with that, on Friday, we also get more economic data coming in with the U.S. non-farm payrolls, U.S. hourly wages, and U.S. unemployment rates. So definitely a lot that we want to go ahead and digest for this coming week. And so with that said, I want to go ahead and hop into the charts and talk a little bit more about Tesla, but from a technical approach as well. Alrighty, so we are officially in my laptop taking a look at Tesla stock from a daily time frame. Now, before we go ahead and discuss the price action that I want us to really focus on, I want to zoom out for a bit and just highlight something. So if you've been part of the Push and Profit private group since last year, then you know that we've been dead accurate with the price action for Tesla. We called out, the selling pressure in Tesla back in 2022. We talked about how 2023 was going to be a very bullish year, and we pretty much were able to take advantage of all this momentum. In fact, even if you're not part of the Push and Profit private group and you simply have been watching these public videos on YouTube, then you know that, or if you have been watching since 7/19, the earnings of Tesla, we also talked about the selling pressure that was going to happen over here, right? So I mentioned that we've been dead accurate on Tesla for a while now, not to give myself a pat on the back, but to actually provide a friendly reminder, right? And this is a friendly reminder that although I've been dead accurate on Tesla for a while now, I don't have a crystal ball. Now, I think it's rather imbecilic to have to even mention that, but it's important, right? Because I don't want individuals to get the wrong idea that just because I've been calling out Tesla very accurately for a while, that you should blindly follow whatever I say. No, that's not the purposes of these videos that I put out, right? The purpose is so that you guys could just get an idea of what I'm seeing with Tesla, and then of course just hear my game plan out for Tesla. It's not necessarily that you guys have to emulate whatever I do, but perhaps if it's something that aligns with your values, then you guys could, take action on whatever suits your needs, right? And oftentimes I talk about Tesla both from the perspective of a short-term trader and a long-term investor, because I do both, right? I invest in Tesla in the long term, but I also trade Tesla in the short term. And I am bullish on Tesla in the long term, regardless that I've been very bearish on Tesla for a while now, right? I think a lot of individuals get that mixed up. Just because I've been saying or having multiple videos about being bearish on Tesla, it doesn't necessarily mean that, and again, to clarify, bearish on Tesla in the short term, it doesn't necessarily mean that I don't think Tesla is going to do well in the future. No, right? We're just talking about the short term. But what are some things that we're seeing right now, right? Well, one of the things I want to point out to is that, we're currently at this area right over here at around $238 per share, right? And one of the things I think we need to keep an eye out for is around this area right over here, which is just nearly $2 upwards. I think we may consolidate for Tesla. Again, not saying that this is absolutely going to happen, but something we want to watch out for, right? And the reason I say this is because, well, around over here, we've had this as a support. Now, old support typically ends up being new resistance, right? Now, it's not necessarily 100% the case, as when it comes to technical analysis, a lot of individuals think that this analysis is to predict what actually happens. No, it's to really just watch what happens, right? So that we can map out what are some areas we want to pay attention to. And so I'm really just highlighting this area around $240 as an area that we want to pay attention to, as we pretty much kissed it and then fell down, and we've been kind of trading sideways with some up days, down days, and then up days, right? And so what I want us to pay attention to is to see, do we break above this area? I don't think it's going to happen, although we did have a lot of positive catalysts over the week, or over last week, but we also see that around over here, right? And we're looking at this volume profile over here. And I say this often on the channel, the volume profile is completely different when you're taking in account from this and your traditional volume by time, right? Because the volume profile shows us volume by price. And what we see is that there's a lot of volume by price at around this area. So even if we do break above the 240 area, we may still just kind of hover around over here. Now, does it mean that we're absolutely going to go down? No, we could still see Tesla move upwards, right? Because again, we're not predicting the future with technical analysis. Again, a lot of people get that, just wrong all the time, right? We're just mapping things out. And right now, from an economic perspective, a lot of the data that we've gotten, some of it seems good, but we're also seeing a lot of pressure on the consumer. And I talk about this in a lot of videos. I mean, if we look at Dick's earnings recently, and it's sad that I'm afraid to even say that company's name out of fear of being banned on YouTube, but Dick's Sporting Goods is what I'm referring to. What we heard in their recent earnings, right, is that they're seeing profits contract because of a lot of individuals robbing their stores, stealing their stores. Now, this is something that we want to pay attention to. Why are you talking about Dick's Sporting Goods and Tesla? Well, I often say that we're seeing this pressure on the consumer and the fact that, these interest rates are high, right? It's very unaffordable to buy a house right now. It's very unaffordable to finance a new car right now. And we're seeing, consumers enter an all-time high debt. And so with Dick's Sporting Goods recently saying that people are turning to a lot of stealing in their stores, which is hurting their profits, well, that's something notable, right? Because people generally don't steal out of fun, right? Now, I'm not saying that's the case for everyone. I'm sure there's someone out there that just absolutely gets a thrill from doing that, right? There's a special word for that too. I honestly don't remember what it is, but if you remember it, comment it in the comment section below. But for the most part, most individuals steal or perhaps, commit some type of theft like that out of some sort of necessity. It's not because they absolutely want to. And recently, we also talked about Walmart's earnings and how Walmart's actually seeing a lot of individuals leave, other chains like Targets or Whole Foods and more expensive chain grocery stores to enter into Walmart because people are looking for value. So that tells you that there's pressure, right? And so that pressure, it could bleed into, corporate profits. And so that's why I don't necessarily think we're at a level where we're going to bounce and continue to make all-time highs for Tesla. I don't think, we're going to break above this descending trend line just yet and continue to go upwards. So I think that's going to happen in the future? Absolutely, right? Especially if Tesla continues on this track of selling the vehicles that they're doing and also all the other products that they have in the pipeline, right? We talk about often the Cybertruck on this channel. We talk about the Optimus bots, although right now we can't put a valuation on them. It is something that could possibly be something significant in the future. We also talk about FSD. I mean, we cover a lot on this channel, and so I'm bullish on Tesla in the long term. Don't get me wrong, but I think right now, in the cycle that we're currently at, I don't see that necessarily happening. Again, I always emphasize that you want to stay data dependent. And of course, if the data starts coming in positive, that we do continue to see inflation cool off without having to see labor, pretty much drop down tremendously, and we could still see the economy grow and everything do well. Well, great, perfect. We get the soft landing that the Feds are trying to achieve. But we heard Jerome Powell's speech last Friday, and one of the things he mentioned, right, and this is me paraphrasing, I don't have the exact quote, but he mentioned that he doesn't see a soft landing without some sort of more easing in the labor market. And of course, more easing in the labor market would mean less individuals having a paycheck. And of course, that could put even more pressure on the consumer, right? And so that's why, when I'm looking at Tesla from this daily time frame and looking at it from a technical approach, around this area right over here, and I know this is very general, but around the 240 all the way up to the 257 range, right? Let's go ahead and map it. I don't typically do this on a video, but let's see if I could actually draw it. I honestly haven't used any of these tools often, as I don't typically do any type of technical analysis or rely too heavily on it. But let's go ahead and draw something right here. So right here, this, and maybe that's not, honestly, I'm not going to perfect it that well because, we are recording this video, but around this area is where I expect to pretty much either get rejected or start consolidating, right? Now I want to turn our attentions to SPY, or SPX, sorry, the S&P 500 index. And from a daily time frame, what we're also seeing is this head and shoulders pattern. Now, you guys know, if you guys have been following the channel for a while, that again, I don't put too much emphasis on technical analysis, although it does have its time and place. And I think, it does work well when you use it in confluence with other data points. And so if you guys don't know what a head and shoulders pattern is, it's a pretty bearish pattern where we have this little shoulder over here, we rise up to the head, we drop down to the next shoulder, and then we continue falling down. And that's something that we're currently seeing on the SPX, right? Now, it doesn't necessarily mean that, stocks have to adhere to whatever squiggly lines or whatever patterns on the chart. Absolutely not, right? Because the data could shift everything, right? We could have data that comes out and that just breaks this whole pattern and things shift tremendously, right? And that's why I said that this week is going to be a very notable week in the sense that we have a ton of data that Jerome Powell and the rest of the individuals in the FOMC are paying attention to, right? And so we want to see, obviously, if we're optimistic for the market to go down, well, we want to see more positive data for inflation. Now, I don't think inflation is going to see a big change in the PCE report that's coming out. And it's not because I want to be a pessimistic individual, but the things that are holding down the inflationary pressures right now, or holding them up, I would rather say, is obviously housing, shelter, right? That contributes significantly, and that takes time to move, right? It's because obviously, even if we see rents contract, right, individuals don't move that frequently. Yes, you may have some certain scenarios where a couple splits up, or a marriage gets divorced, or a spouse dies or something like that, and people end up having a unique situation where they have to move. But generally speaking, individuals don't move every other week, right? Unless you're a traveling nurse and that's part of your career, or you're part of the circus, whatever it is. Of course, there's unique situations. You could find that in every scenario, but generally speaking, people don't move that often. And so this is why we're seeing this delayed reaction in housing, right? And that's keeping, obviously the index for inflation upwards. We're also seeing service inflation not really cool off tremendously. And so I believe that the next report isn't going to be too significant of a decrease as far as the inflationary pressures, right? And so what other reports? Well, we want to really pay attention to the labor markets. I think this is something that Jerome Powell stressed out more in his speech. And if we continue to see labor tight, well, that could put more fear into the market that perhaps we may get the Feds hiking pretty much in September, right? Last week we actually saw that. And I'm actually paraphrasing the numbers, but there was a 36% chance, around that percentage number, of the Feds hiking during September. Well, that percentage increased to around like 50 to 52. I would have to double check on the numbers. I don't have them right in front of me. But the point is, it's increased. And so there's some fear that the Feds may continue to increase. And I don't think they necessarily have to, right? This is just my opinion. I think they actually are overdoing it. But they may do it just to prove a point, just to say, hey, we're not giving up. And so and this is again my guess, I don't necessarily think they're going to hike in September, but the next meeting afterwards, I think that they may end up hiking just to make sure that they get the job done. It's kind of like getting a headshot, in a video game, right? You want to make sure that you actually get it done, right? Get the job done. And so this is something that we're concerned about because obviously, well, that could put some more pressure on the overall economy, and again, that could bleed into the corporate earnings. And so this is why, we want to pay attention and have that holistic approach and take a look at everything that's going on. And from, what I'm seeing on Tesla, I do think that we could still continue to go down more, right? I don't think that the selling pressure is necessarily over. And so that's pretty much what I'm paying attention to. Now, as a trader, if Tesla, does get rejected over here or consolidates and then continues to fall down, well, I'm going to take advantage of, Tesla going down. That's going to be my game plan. But as a long-term investor, it's going to be the same approach, right? I'm going to wait for a sell-off. Let me go ahead and remove this. I'm going to wait for a sell-off and then an area where it consolidates and then bounces, right? And that's when I'm going to want to add in. Again, there's different approaches for investing. Some individuals like to dollar cost average evenly every single month. And, that's a great approach as well. I do that for a lot of the index funds that I invest in. But when it comes to individual stocks like Tesla, I have very few individual stocks in my portfolio. It's mostly just Tesla and I believe Nvidia, Microsoft, just to name a few. But I'm a boring investor and invest in a lot of index funds. There's a lot of great books that explain the reasoning why that's actually more beneficial for most people. But, looking at Tesla, it's going to be the same game plan, right? What did I do when Tesla pretty much hit this area that I said, hey, we want to pay attention to, and if it starts bouncing up, you may want to add into your long-term portfolio? What did I do? Well, I bought more Tesla for my long-term portfolio. It was selling off. I waited for that sell-off. I didn't want to just buy just when it was coming down because you could catch a falling knife. I don't want to wait for things to sell off. Then, once it hits that bottom, I want to see that confirmation that things are going upwards, and then I'll add in. And if we see that again with Tesla going up a bit, but then selling off some more, well, I'll wait for that confirmation of that uptrend to go ahead and add in. So that's pretty much my approach from a short-term trading perspective and a long-term perspective. Again, you guys are free to do whatever you see value in. You guys, of course, need to do your due diligence and only copy what I say if you find value in it, not just because you blindly want to do it, but only if it sounds reasonable, right? And again, I'm always saying the data could shift. And so if the data does shift, I will have to shift my whole entire approach. And so with that said, hopefully this video provided some insight for you guys on what's going on in the economy, especially talking about some of the earnings like with Dick's Sporting Goods and Walmart. And we'll continue to monitor these earnings, right? As I often said in the Push and Profit private group, I believe that the third quarter, we're going to see a lot more misses in the earnings, and I still am holding down on that. I haven't changed my perspective or approach on that, and so we're gonna go ahead and again continue to monitor that. But with that being said, guys, again, I hope you guys found some utility in this video. And before you guys go, I'm gonna need you guys to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.